My friends, what is going on? It is time for the AMC Weekly Outlook video. Today we are going to be talking a little bit about GameStop. We're going to look at the option chain and we're going to do a technical analysis of the AMC chart. And if the video is not going too long, we'll also jump into my cycle chart right at the end. Before we get into the video, you guys know the deal. Nothing I'm giving you is financial advice. Everything is for educational purposes only, so that way you can just make great decisions for yourself, your family, and your portfolio. If you haven't done so already, please follow me on Twitter, Colin_Gladman. Easiest way to keep up with kind of my intraday thoughts. If I see important news, all that kind of stuff. But easiest way to interact with me is going to be through Twitter. If you haven't done so already, please, like and subscribe to the YouTube channel, comment, all that kind of stuff. Help the algorithm. If you appreciate the content, I appreciate you. And please just let me know. So having said that, let's jump into the video. So I actually want to start today talking about GameStop. What GameStop is in right now, in my opinion, is it is just in a massive bullish pennant. So this is going to be the weekly chart. If you look at the weekly chart, you had this long period of upside. Obviously, this is going to be what led to the January 2021 gamma squeeze. And then since then, for basically a year and a half now, it's been consolidating up here in this pennant area. If you go and just do a simple Google search of what a bullish pennant is going to look like, you'll find tons of examples. I like this one right here, just kind of keeps it simple. So right here, you had a massive uptrend, then it formed a pennant where you were consistently making, lower highs, but also higher lows. And then you have a breakout, and then you kind of retest it a little bit, and then you have continuation. So if we were going to essentially do the same thing, so we had our uptrend, then we had our consolidation period. And right here, things start getting compressed. We start making those lower highs, but higher lows. Then we have our breakout. Then we might have a little bit of consolidation out here before we start getting continuation. Okay, now that's going to be the long-term game. Okay, I know so many people who are in both GameStop and AMC, they want their squeeze and they wanted it 9 months ago because they need their money now. And the reality is the stock market is all about patience and making time your friend and compounding gains over a long period of time. So, it's always nice to make a quick buck, don't get me wrong. But the reality is, especially if you're going to be a shareholder in the company, you got to be willing to play the long-term game, not just talking, purely about options here. So GameStop is looking very good. In my opinion, it is clearly broken out of its long-term, pennant that it's been in. It broke out of its top trend right here. Get in here just a little bit closer. So you can see, once again, the January 21 gamma run. Then you got rejection here, rejection here, rejection here, rejection here. Then it actually pushed up. Now, it looks like it might come back down here and retest the top of the pennant before starting to get some continuation. So GameStop is looking very good. And I honestly think that sometimes it might be, if you haven't already done so, please go watch my video that I did yesterday. I basically laid out the case for why I think we could start the week with a little bit of downside with AMC. And I know right now, man, everybody's just so tense. It was like, what? This guy said downside on AMC? Martha, go get the shotgun. This guy says AMC's going down. There's just a bunch of freaking out about it. So I think we might start the week with a little bit of downside just because AMC, the IV is really hot right now. We've got a lot of bullish indicators as far as the spinning top on the weekly. We've got the dark cloud cover on the daily. The RSI is running hot, has been running hot, still running hot. So I'd like to see a little bit of pullback there. So I would like to see a start of the week with downside for AMC, so that way it gives it enough room. So that way when the next push to the upside comes, there's room to go in the stock. If you're already running super hot, yes, it can always go higher, but statistically and historically, that's not the case. What statistically happens is when everything starts running really hot, you're going to have a pullback to the average or to the mean. Okay, that's just what makes the most sense. So for simplistic purposes, if let's say this is your average right here, and the stock starts running really hot, and then really cold, and then really hot, and then really cold, and really hot, what you're going to find is you're always going to be coming back to your average or to the mean. So right now, AMC is running really hot. So what makes the most sense is for it to start coming back down here towards its average a little bit before continuation and push back towards the upside. All right. So if we go over here, we look at the option chain for AMC this upcoming week. The option chain as far as calls, as far as out of the money calls go, I mean, there is a lot of open interest. At 25, there's 22,136 contracts according to Yahoo. At 30, there's 33,320. And remember, each contract represents 100 shares. So 3.3 million shares at 30, 2.2 million at 25. Now, if you go look at what's going on from a put standpoint, then there's really not a lot of open interest right now. And which makes a lot of sense because, I mean, there's probably a lot of people who aren't really willing to step in front of the freight train that's AMC right now, just because we got the APE dividend that is going to be coming out. It's going to start trading Monday of next week, which is going to be the 22nd. You can buy AMC shares up until the 19th of this week and still receive the APE dividend. So real quick, I just want to address this before we go any further. My thoughts as far as any of the delaying APE or anything like that goes. Number one, I think it's not going to happen. Number two, I think it's going to be stupid if that does happen. Number three, please be very responsible about who you let in your head, and people who just say wild and crazy things on the internet without backing it up with any proof or data or facts. I just think you need to be very cautious against that, especially this day and age. And it doesn't take a lot of research to be able to find facts for yourself. So as far as I'm concerned, I'm completely dismissive of that idea. I don't think it's a wise idea. I think it's a great thing for AMC. Now, is it a great thing short term for a squeeze? No, I don't think that it is. Is it going to be a great thing for AMC as a company that helps drive out the short thesis with them shoring up their finances and their debt? Yes. I am a big supporter of APE. I think I think there's going to be offerings on APE. Another thing that I want to address real quickly as well is going to be the idea that they're doing this to, so that way shorts can come in and buy up all the voter rights and dilute AMC, buy a conversion and all this other kind of stuff. The reality is, my friends, here is when APE gets released, there's going to be an equal amount of AMC shares and APE shares. Okay, so there's 516 million shares of AMC. That's not the exact number, but that's pretty close. There's like 516 million shares of AMC. That means there's going to be 516 million shares of APE. So what CEO Adam Aaron can do is, if APE, let's say APE really starts moving up in price, they can do an offering on APE. Now there's going to be 5 billion shares total. Obviously, they're releasing 500 million at launch. So that means there's 4.5 billion left that they can do an offering on. They are not, in my opinion, going to do a offering of all those shares at once or anything along those lines. What makes sense is to, as APE goes up, then you do an offering, then that's going to pull the price back, then buying pressure is going to push the price back up, then you do another offering, and that's just how companies raise money. So the people who are freaking out about we're going to lose control. Well, right now, retail owns the float of AMC. That means when APE is released, because it's like a 2-to-1 stock split, like I've been saying the entire time, that means retail is also going to control APE. Now, the only way retail loses control is if they quit buying AMC and they quit buying APE, and enough APE gets issued that, shorts or nefarious players, as people think, can actually come in and buy up that many shares. And also too, your reality is going to be, if somebody comes in and let's say they buy up 1 billion shares of APE, what do you think is going to happen to the stock price of APE? It's going to move on up. All right, and then you can make a decision that's best for you and your portfolio and your family about whether or not it's time to get out for you. So if a billion shares get bought up, the price goes really high, and you go, you know what, I'm a little nervous about losing voting rights or anything like that, then you can make a decision that's best for you. If you're just like, no, hodl to the moon, Moaz, well, then you can make that decision for yourself and your family too. I don't care. It's your portfolio, okay? Sorry, let's get back to the video. So not a lot of standing in the way as far as the option chain goes, as far as AMC being able to move upwards this week. So now let's look at the chart. So same thing. This is going to be the weekly chart on AMC. So much like GameStop, it has broken out of the way I have drawn the bear trend line. I know there's a lot of other people who have it drawn, differently than I do, and that's fine. That is their opinion. This is the way that I personally have it drawn. So it's basically you've got your all-time high, you've got your rejection that happened in September, you've got your multiple rejections that happened in November, you had your rejection that happened in March, and now we've actually broken through that, and we are retesting the top of the trend. So much like what I think with GameStop, I think coming down here, kind of retesting the top, accumulating here for a little bit before pushing back up, that is what makes the most sense to me. So now let's go in here into the daily. Once again, I did a video yesterday as far as what I think I could be seen possible as far as the downside. Typically, however Friday ends, you see that continuation or that momentum carry over into Monday of the following week. And the reason for that is going to be typically what you see is you see your highest volume traded right at the beginning of market opening and then right at the end of the day. That's why every single day, I'll just kind of pull out the 5-minute candles here. So this is why virtually every single day, let me zoom in here, sorry, we'll get a little bit closer. But this is why virtually every single day you see kind of a horseshoe shape and volume. So you always see, big volume at open, kind of a lull throughout the day, big volume at close. Big volume at open, lull throughout the day, and then big volume at close. So that's why typically you can see some continuation for however it ends the previous day, that continuing over into the following Monday. So if we do, come out of the gate and it gets pushed down a little bit, like I've been saying, what I would like to see happen is a push down here to maybe like the 382 at the $23.32. What I think is most likely is a double bottom here at the 22. So that would be my most bullish case scenario. However, retesting the top of the trend line comes down here to the golden pocket area. So all of these, the 382, the 0.5, the 0.618, those are all going to be, healthy retracements for AMC. It's going to allow the RSI to cool off. Now, if we're looking at it though on kind of the lower time frames, then, dang it, need to get an upgrade. But if we're looking at it on, the lower time frames, then we're already starting to see that some of the lower time frames have already cooled off a little bit. Let's go see what the hourly looks like. So the hourly's bouncing at the 50. That looks great. 4 hour. So 4 hours starting to come back into the bullish range. It's not overbought anymore, 64. And then the daily was like right at the top of the range. Yeah, still at 71. So a quick little push down, Monday morning could really help with the RSIs, getting them back into some of that, neutral territory, refuel the rocket ship, if you will. So when I say that I'm seeing downside in AMC, like I had somebody on Twitter being like, bro, you already saying, man, you see downside all week next week, man, shut up. And that's not what I'm saying. What I'm saying is I'm saying in the short term, I think we could see some downside. And then all that's doing is, once again, it's just cooling it off. So that way we can then push up to higher highs. But that's what I would like to see. So that way we can see continuation. Okay, so there's nothing wrong with wanting to see downside and making a higher low. That way you can push up to a higher high. If we look here, So looking from a standpoint of level of confluences, so right here at the top of the range, that's going to be on the more micro, that would be the 618. If we take that same fib and we come down here, well, now the top of the range is the 0.5 is going to be at 2065. If we go more of our macro from our, I believe it was May 12th low, yep, May 12th low, then that was going to be the 382. So it's the 382 on the more macro fib, it's the 0.5 on your more local fib, and it's the 0.618 on your more micro fib. So that's several levels of confluence that lets me believe that that's where we're coming. Also, another level is going to be the fact that that is going to give us another touch right here on the 200 simple moving average. If we come back here, you can see that it was big time resistance right here, resistance right here, resistance on the March run. Now we broke through it and we're coming down here and we're finding support. So if we came down here and double bottomed off of that, I personally would like to see it. That would just show that much more strength in AMC, and the more strength that AMC shows is going to be more reasons for buyers wanting to step in at those prices. So that's going to be what I'm looking for this week. Let's see here. We haven't gone too long. Yeah, we'll go ahead and jump in and look at here at the the cycle chart. So I flipped it a little bit just because normally I've got it side by side. It's starting to get big enough and long enough that I flipped it to where. So the top chart is going to be what happened between March all the way to the June run, and the bottom chart is going to be where we currently are. Now, I have always said that when it comes to cycle charts, nothing is going to be one for one. Levels aren't going to be the exact same. What I am looking for is the similar shapes and the patterns, because I personally believe the large majority of how stocks move is all done off of computer algorithms. So that's why they always kind of have like those cyclical patterns to it. If you look and you dive in really closely on just about every single chart, you can see these similar types of patterns. So this is what I've been tracking. Now the reality is the January run up had a similar pattern. The June run up had a similar pattern. The March run up had a similar pattern. So what I personally believe is we are playing out another run up pattern. Now how high potentially that run up can go, nobody knows. We're going to find out. But when there's big moves that are happening on AMC, it always, in my opinion, plays out these very similar patterns. So the biggest difference between what we have in what happened between the March to the June run-up and what's happening now is if you look right here, so once again, up top is going to be my March to June run-up. And if we look here, the biggest thing was in that March to June run-up, the little orange box that we had right here, that is where once it was getting pushed down after the little run, once it was getting pushed down, that's where it met its bottom before it started that upwards accumulation pattern that pushed into the June run. I've always said the biggest difference that we've got going on right now is right here, it came down much lower. Okay, so where I was hoping it was going to stop at 1290, it actually came down here to basically 990 or 970. That's right, 970. So let's just call it $3, just for the sake of keeping the video and the math easy for me. So let's say it came down $3 lower than what I had anticipated. So I've made multiple videos about this chart. I've been using it and posting about it since like March 25th or something along those lines. But the reality is when I first started creating it, I just didn't talk about it, was back here in January, where I was looking at this triangle pattern. And then when this run started and everybody was like, it's squeeze time, I was like, no, listen to me. If we stop up here, and there's a video, so feel free to go check receipts, but if we stop up here at 34, then it's going to come tumbling all the way back to $12. And I was called a shill and stupid and all that good stuff, which we just call that every day on Twitter. So anyway, but it was right, and it came back down. Now, what I wasn't right about is the fact that I was hoping it was going to stop right here at the $12.90 level, and instead we came down here to the $9.90 level. So if we give ourselves that $3, if you will, then this touch right here that led up to earnings was $18.96. Okay, so let's call it $19. What I was looking for is the touch right here at $22. But so if we come up here and we give ourselves that $3 worth of grace, then we had the $19 touch, and then we had the dump back, and then the massive shoot up. So if we look at the top chart here, once again, it came up here where it started its run before it dumped back off, and then you had the massive breakout. So let's get in here just a little bit closer. And yes, another thing too, guys, people are always asking me, like, does it matter that they're not on the same time frame? You can go down and break them down on the same time frame. I use the different time frames so you can see them comparatively a little bit easier and better. So the short answer is no. It doesn't matter, because what I'm looking for is I'm looking for levels. I'm not trying to chart anything from a candle to candle standpoint. So if we give ourselves, once again, that $3. So I was hoping we would come down here, once again, stop at the $12.90. We came down here and we went to $9.90. But if you use this top right here, and you can see, if I get in here a little bit closer, so once it hit that teal line, had the little dump and then the big push up. So if we giving ourselves that $3, then that would put that right there, and then the big push up, or excuse me, and then the big dump, and then the push up. So where I think potentially that we currently are from a cycle standpoint is, and if we go back, so right here, this is going to be March 19th. So that first little dump off, and then it created like a bear flag, and then it came down here and did the double springs before it dumped off into its final accumulation pattern. Then if you go back here, so that first little dump off and the bear flag, and where it stopped at the bottom, it also stopped right here. So there's a couple of spots that I think that we could be, honestly. Spot number one would be, are we right here? Are we right here at this little accumulation right here, or reaccumulation, however you want to look at it, before we push back up to the top? So are we right here? Oh dang, I forgot my face is down there. Hold on, let me see if you guys can still see this. Okay, sweet, you can still see it. And are we about to make this move? Are we about to make this push right here up to maybe around like the $45 range? Then we kind of create the M shape. Then we come up here and make a flat top. One more dump down here before potentially looking at higher highs. Or, and honestly, this is my bias, or the more I look at it, are we already kind of up in here a little bit? So are we already kind of doing this move right here? And if you look, you got the big push up, then this would have been a little reaccumulation, another big push up, and now we're kind of making that M shape. And if we are, then we've got to, probably finish out this dump, which would take us somewhere around that $20 to $22 range before another push up, trade up here in the range, then drop down, and then start moving up after that. And so the truth and the reality is I just don't know. What's great about the cycle chart is it gives you an idea of what's going to happen. What's frustrating and why I don't ever recommend trading purely off of it is it's really kind of one of those you have to use looking back just a little bit from a standpoint of where you're at in the particular cycle or pattern. So it's not like a roadmap or a treasure map, if you will. It's something that you got to use that, you got to take it with a grain of salt, and you're constantly going, but like I said, you can look back and see how well each level's played out. The problem is predicting each level. and that's a little bit more difficult to do. So what I'm confident in is, according to this, I just don't see new lows being made. I really don't. I think we are either going to see another big push up this week, and then we kind of start that, what I've always called the launch pad period, or are we already up there? And it's just going to be a little bit smaller version, and then the reality is this pattern, its big squeeze, if you will, is only going to take us, up to like the 130 range. And another thing that's a little bit confusing that we don't know is we just don't know exactly how APE is going to make all this look. So just like with the GME split, guys, I mean, you can see there's not just like some massive drop off. So you're going to see the same levels, if you will, when it comes to AMC. They're just going to be lower, and it's going to be APE and AMC. So things are definitely changing right now, okay? Because it's not just going to be AMC anymore. It's going to be AMC and APE. So I'm not going to lie to you, my friends. I just don't know exactly what all this is going to look like. My hope is that we're going to see some true supply and demand going on with APE, because there's not going to be an option chain attached to it at launch. And so I'm hoping we're going to get to see exactly what actual buying pressure is going to look like. And we can really, through the power of retail and everybody buying APE, we can really push that price up. Multiple times back in like November and December, a bunch of other people, myself included, we talked about how, my biggest concern with AMC has always been their debt. And it's not just their debt. This is when people always go, Apple has debt. I was like, yes, but Apple is also a very cash positive, cash cow machine, if you will. AMC is not. AMC is burning money right now. Now, yes, it's also starting to bring in, a ton of money. It was the best, quarter two in a very long time. And what I really like to see in here is the fact that they are making more money, or not more money than pre-pandemic, but we're starting to get, better attendances. The box office is pretty much the same, but with like half the releases. Things are looking very, very good. And I think the future of cinema is very bright, but I do think AMC needs to clear off some of their high interest debt, especially with interest rates only going up. And so my hope is that we're going to be able to not necessarily control the price of APE, is not the correct way to say it, but we're actually going to be able to see some, true supply and demand and buying pressure, and we're going to be able to increase the price of APE, which is going to allow AMC to do offerings or dilute APE, and then that is going to give AMC the war chest, if you will, to do mergers and acquisitions, to pay off high interest debt, to really just shore up their business and their finances. And I've said multiple times already that is what Adam Aron is trying to do. He is not trying to create a short squeeze for you. Let me say that again. He is not trying to create a short squeeze for you. He is trying to provide value to his shareholders, but he's doing that through the way he knows how to, which is being able to raise capital for AMC. He's trying to drive out the shorts because he's trying to make AMC such a rock solid business that there's no reason for shorts to want to pile in. Once again, 4 or 5 years ago, streaming was getting super hot. The word on the street was like, theaters are antiquated. Nobody's going to go to theaters anymore. Streaming is the future. That's when shorts started piling in. Then you had the pandemic happen. They piled in even more. And what he's trying to do is he's trying to drive them out through shoring up AMC from a fundamental standpoint on their business. So, and I'm fully supportive of that. I think that's his job. Okay, so what I want to see is true supply and demand with APE that allows AMC to do offering, that allows them to raise capital, and that allows them to shore up their business, thus driving out shorts because the business is getting more fundamentally rock solid. And, this is where people will say, it was never a fundamental play, it's a squeeze play. And I agree with you, okay? I'm a technical trader. I really don't ever give a crap about fundamentals, to a large extent. What I care about is, what is the chart showing me? However, the more fundamentally sound AMC can be, then you're going to have the fundamental shorts who piled in because they believed it was a business that was going out of business. They're going to want to get out. So that's what his job is. His job is to run the company. And I think he's doing a good job. And I trust him. I believe in him. I've always said that. He's always done exactly what he said he was going to do. And so until he does something that is not what he said he was going to do, then I'm going to trust him as CEO. So let's wrap up this video. So I would like to see a drop, like either Monday morning, maybe it extends to Monday, even to Tuesday morning, but I would like to see a drop back to that $20 to $22 area that we talked about right in here. So anywhere between the 200 SMA, creating a double bottom right here at 22, anything along those lines is all going to be very normal, very, good bullish retracements. Like I said in my bearish video yesterday, pretty much unless we really start breaking this level. So if we come down here and test this and we get a weak bounce, and then when we break, if the selling pressure really starts to pick up here, then I think that's when we could experience some lower lows, and not lower lows as far as like down here into like the $7 or $8 dollar territory. But we're gonna take a $18 catch, or what's just the 618 from right here? So maybe $19. Drag it out a little bit further from your big touch points. $16, somewhere in that ballpark is what I think could happen. So if we do continue to drop, we want to see that volume staying really light. And then what we're going to be looking for is we're going to be looking for weak price action from the bears. So all these, just like you saw weak price action up here on the second push up, this is where I became confident that we were going to drop again, because you saw the boom booms that led us up here. Then when we started pushing back up, so we hit our high of 27.50, got pushed down. Then we pushed back up, but we didn't even get there. We only got to 26.10. Then we got pushed back down. Then immediately, as soon as we got back up here to 27.20 that next morning, we got pushed down really hard. And then as far as I'm concerned, the bears have been in control ever since. So even as you started pushing back up, these are all very weak, little to no buying pressure in any of these candles. And then you had bears take over into day on Friday. So like I said, that's why I think, especially Monday morning, we could see a continuation to the downside. I'll be looking for IV cooling off. I'll be looking for RSI cooling off. Be looking for weak price action from the bears. And then that's when I'll be looking at adding more shares and calls at that point in time. So just because I see short-term downside, please don't shoot the messenger. That does not mean that I think the run is over, the squeeze is dead, or the play is dead, or anything along those lines. Like I've said multiple times before, if anybody is only telling you upside things and only posting upside charts, they are not your friend. They are giving you their bias 24/7. Do not listen to people's bias 24/7. You got to make sure that find people that are willing to tell you the good, the bad, and the ugly, because that is reality and that is life. And as I'm sitting here looking at this, I'm looking at this as this potentially also could be just kind of a horizontal channel right here, just like I talked about in my videos, where they typically break out the same way they came down. So if we come down here, test the bottom again, and then kind of move up, maybe one more rejection, and then start curling out. So just what we want to see. All right. Most bullish case scenario is just going to be we come out of the gate Monday morning, maybe just drop a tiny bit more, and then start with the immediate curl. So my overall view is short-term downside followed by more upside. Like I said, we just want to make sure that the selling pressure doesn't start picking up as we continue to drop. As long as that doesn't happen, then bears are going to get exhausted, and we're just seeing some normal natural pullback right now. I hope this video was helpful to you. If you made it to this point, I just want to say thank you. I really appreciate your time. I personally put my heart and soul into every single video that I do. I'm not ever going to tell you what you want to hear. I'm going to tell you what you need to hear, which is what I want for myself. So I just appreciate you. I thank you. I hope you have a wonderful week. I hope you have a wonderful Sunday. And I will see you on the next video. Once again, I only make videos when I think there's something important to say, so I don't know when that'll be. Might be Monday, might be Tuesday. Like I said, lots of craziness going on. Don't stress out about APE, and let's get it. Hope you have a wonderful week. Have a good one, my friends.